Hello everybody, hope you're doing well. It's Lane here with MetaShackle. Today we're going to be going over the XLM and the ALGO charts, and I'm going to make a case for what could potentially be $3 plus XLM as well as a 10 to 11x return on ALGO. But first we're going to go over a couple of things. Even though the markets have been going down drastically since about mid-December, you can still see here on the charts that the Bitcoin dominance is still leaning heavily towards Bitcoin. Now, the Trump election pump rally that we saw, which started on November 4th, the day before the election, is represented right here on the chart. Now, you can see that those massive gains that we made in XRP especially, setting a new all-time high, that entire month and a half where the price was going ballistic is only represented by this little tiny drop in the Bitcoin dominance chart. Think about that for a second. Keep that on your mind, because the last time we had a huge divergence from Bitcoin to the overall, I guess what would be called other cryptos, is right here in about January 3rd, 2021, the price dropped massively over the course of about the next 5 months. 5 months worth of drop. Now look how big that drop was compared to what we saw here for the Trump election pump. And you mean to tell me that the bull run is over? I don't think so. I think we're just getting started. But just like anything in life, timing is everything. The fear and greed index has also gone up just a tad to 22. I was hoping to see it break down below 20 to keep us in the extreme fear range, but I still think that we're going to see a slight move downwards before we start to move up again. But it's actually starting to look really, really good, especially when you look at the following charts. So this is something that you want to keep your mind on. If you haven't started accumulating, or you've already started accumulating, this is where you want to be buying. This is where the normies buy. Comprende? And I also just wanted to take a quick peek at the Mannarino Market Risk Indicator, which is a broader tool developed by Gregory Mannarino, who has a great channel on YouTube that I like to watch occasionally. He has really great insights into the market, and this indicator, especially in the realm of stocks and just the overall stock market in itself, I think is the best indicator in existence. We haven't quite popped back into the extreme risk range, which we were floating in for a little while, in about mid-December to about mid-February when we broke down below the 300 level. That's a good sign. Now let's get to these charts. This is the XLM monthly chart. And as you can see, back in the 2015 to the 2017 era, we had this descending wedge pattern. We broke out of this pattern, came up, set a new all-time high, then consolidated for the next 3 to 4 months, hanging out in this area, creating this bull pennant, which looks frighteningly similar to what we're dealing with right now. If you look at the two of these pennants, they're almost identical as far as their structure on the top end of the consolidation. And when you look at the overall pattern from the 2017 breakout coming up to the new all-time high, which still to this day stands and has not been broken, you can see that after this consolidation, this marked about the halfway mark of the overall move before it went up to set that new all-time high. So if you look at where we are right now with the pennant that we are showing, you can see by marking out that same mark, assuming that it was going to make a move that was similar, not on a percentage basis, but just overall, you can see that if this pattern repeats here, moving up to break and set a new all-time high in this area here, we would effectively be jumping in to the $3 to $3.20 range to do so. That's if it repeats. But it's not completely identical if you look at it, because we are still trading within this wedge pattern, to where this pattern here, when the bull pennant formed, it actually broken out of the descending wedge. So there's also the possibility that we could actually be at this point right here rather than this point right here as far as the overall move is concerned. But what I want you to just focus on is the fact that these two pennants look damn near identical to each other. And another thing to consider is my grafting trading strategy that I use. The weak doji is marked out right here on the chart. This white line shows where it was, and if you check out the chart, you can see that the price came down to that area and is trading right at that weak doji. That's no coincidence. Now there is also another weak doji below that, which is right around that point 19763 area. So if we do break down and take another candle down, as we saw in this pattern right here, there's a good chance that that's about the area that it's going to go to. It might go past, it might come to the moving average right here on the Bollinger Band. That would be my guess right there. Now that's no coincidence that it came to this weak doji. I haven't taught a lot about my grafting trading strategy yet, but the more you learn about it, the more you'll realize it's not watching all these other candles that's important. People watch the strong candles. It's the weak dojis that are the ones you want to pay attention to. Not just the crosses. They can be shaped like T's. They can be shaped like upside down T's. They can have a little bit of body in the middle. There's a wide variance, but basically what you're looking for is a candle with a wick with a very weak body. So by looking at this chart overall, you can see that if this pattern repeats itself or is similar, that we could absolutely be seeing at least a $3 XLM by the time we get to the top of this range up here. And honestly, I don't even think that that is going to be the end of the move in its entirety. Now, moving on to the Algorand chart, we can see something fairly similar but quite different in the way it's approached. This is when ALGO first started trading. This is also the monthly chart. Now, it formed this wedge pattern here. Once the price broke out of that wedge pattern, it came up, formed a bullish pennant, bullish flag. Then, after consolidating, it broke out again to take out that high and set a new high here. And then the price basically broke down over the next couple of years, as we know. And now it has formed another pennant, which it broke out of on the Trump pump, setting this high right here around the 60-cent level, and it has been consolidating back down. Now the other thing that you want to pay attention to on this chart is the fact that when it broke out of this pennant, it was trading in the green, trading above the Gaussian channel. Now we are trading within the Gaussian channel, and we are actually in the red. So when this section of the Gaussian channel turns green, it's going to be incredibly bullish, incredibly bullish. When this breakout happened here, it was already trading out above the Gaussian channel. But the top of the Gaussian channel is up here now. So we have this much more distance just to go to get started to match this breakout. Now, if you look at the price that we're trading at now, which is right around 26 cents, you can see that there was also a weak doji right here on the chart. Price action was pretty close to trading around in that range. It dipped below, but overall the bodies of the candles have ended right in that general area, which is something that you will see quite often with the grafting trading technique. We also have another weak doji right here, which is a split center doji. But if we break down from this price range, that would be where I would expect it to go right here. That doesn't mean that that's going to be where it stops, but that's just where I would assume it would go, and that would bring it down to the 18-cent level. But at some point here, we are going to see a rebound, and we're going to see a breakout. Now, if you think about where we're at here trading off, let's say the price does come down, break off of this 18-cent level, and rebound. We're going to go back up and retest the top trend line right here. So attempting to set a new all-time high is going to be one heck of a task, especially where we're sitting down here at 26 cents. But to test this upper trend line right here, That is going to take us all the way up to $2, which would be approximately 11x from this weak doji down here. But if it doesn't drop down here and it breaks off of this 26 cent level, we will still end up seeing a 9x just to challenge this upper trend line. Now look at the two patterns we see here, this breakout, the consolidation, the setting of a new all-time high, and look where we are right here in that same process. The only difference being that we are set much lower into the Gaussian channel at this particular point in time, which gives us a lot more potential moving forward. And honestly, it probably sounds stupid, but I don't think $2 is going to cut it. I think we're going to see ALGO move up to somewhere around $3 to $5 at around the same time that we see XLM breaking over $3. I don't really have a high-end price target for XLM, but ALGO, the way it's structured, when this puppy starts moving, it has the potential to gain incredibly high dollar amounts just because of that structuring. Not to mention, it's an ISO 222 compliant token, just like XLM, just like XRP, and we are not experiencing an altcoin run like we have in the past. That's why many of the altcoins did not rally with XRP and XLM and with the other ISO 222 coins and with Bitcoin. They literally went stagnant and have been losing. Now that's not a typical altcoin season. That's because it's not a typical altcoin season. Altcoin seasons, as we have seen them in the past, are done. They're over. What we are experiencing now is the world's first crypto utility run. We are going to start seeing utility breaking out and leaving all of the worthless memes, the Shiba Inus, the Doge coins of the world, the Lunk coins, trash tokens are going to go away. And utility is going to be the law of the land, at least in terms of crypto. And the more utility that it serves, the higher price it's going to go, and the more it's going to be coveted. So that's something that you're going to want to think about depending on what you're invested in. Because if you have any money in trash tokens, you're going to want to ladder out of those positions and get that money somewhere that's not going to fall into a black hole. Utility, utility, utility. So keep your eyes out moving forward. $3 XLM, $3 to $5 ALGO. I think we're going to see it. So thank you for watching. I just want you to know that I appreciate each and every one of you. Have a great day.
And you know something? They'll get it. They'll get it all from you sooner or later because they own this fucking place. It's a big club, and you ain't in it. You and I are not in the big club. By the way, it's the same big club they used to beat you over the head with all day long when they tell you what to believe. All day long, beating you over the head in their media, telling you what to believe, what to think, and what to buy. The table is tilted, folks. The game is rigged. And nobody seems to notice. Nobody seems to care. Good, honest, hard-working people, white collar, blue collar, doesn't matter what color shirt you have on. Good, honest, hard-working people continue. These are people of modest means. Continue to elect these rich cocksuckers who don't give a fuck about them. They don't give a fuck about you. They don't give a fuck about you. They don't care about you at all. At all. At all. Yeah. You know? Because the owners of this country know the truth. It's called the American dream. Because you have to be asleep to believe it.